What do you make of the shrugging off of the government shutdown and its impact with markets now at record highs?
Well, the reality is, the shutdown doesn't necessarily have huge economic implications. At times, there's definitely been some market implications. But the reality is, I think the labor market softening, lower interest rates, and strength of the higher income consumer may help. But I think it's going to be choppy until some of these stimulus effects kick in early 2026.
We've been kind of ebbing and flowing with regard to the overall favor and impact of, say, the Magnificent Seven mega cap tech trade versus the so-called broadening out trade. Right now, it seems the focus is right back again on the mega cap tech trade as well. Does the broadening out trade have any real chance going in 2026?
I think it certainly could. The one thing I would say is that I think most investors should have a little bit of a barbell approach, going into this, particularly going into even something like a government shutdown. I think having some defensive sectors and having some growth sectors is perfectly appropriate. You were just talking about gold in your last segment. I think having gold to offset a potentially weakening dollar is also important. And one thing to keep in mind, you look at a sector like healthcare. I mean, in midterm election years, healthcare has outperformed the S&P in 11 of the last 13 midterm election cycles. So I think having a stake in a sector like that is very important.
Now, one of the main reasons why we like bringing on advisors like yourself, you provide insight on an aggregate basis into what your client base is thinking. So within your client base, what exactly are the conversations like? What are the biggest concerns they have right now? And is it enough for them to call you and say, what should I do differently with my money, if anything?
Yeah. I'd say, Dom, the biggest thing that is affecting, clients today is that this emotional reaction related, that's more politically related, right? I mean, we've obviously, been in a time where, the political rhetoric is sort of ramped up, and I think that creates, an emotional response by a lot of people. And so I think in many cases, the conversations around, what could happen? Am I safe? Am I protected? What will happen if this happens? And we try to create these scenario analysis and create a portfolio that, is not dogmatic in the sense, if they have a particularly risk adverse reaction. And so we want to take an approach that I think is going to, compound for years to come, but is certainly versatile enough to take advantage of opportunities if you get, corrections in the market and pullbacks in the market like we have this year.